Hello everyone. Welcome back to our channel. I hope you're all having a fantastic day. Today, we're diving into a topic that's super important for anyone looking to take control of their financial future. We're talking about the difference between saving and investing. Now, whether you're just starting your financial journey or you've been managing money for years, understanding these two concepts is crucial. So, let's break it down and make it simple. But first, let me ask you this: have you ever wondered why some people seem to grow their money effortlessly while others struggle to keep their savings intact? What's the secret? Well, it all comes down to how they approach saving and investing. So, let's explore what sets these two apart. Let's start with saving. In a nutshell, saving refers to money you set aside for short-term goals or emergencies. It's about creating a financial cushion you can easily access when you need it. Think of a savings account. This is where you might keep money for a holiday, a new car, or an emergency fund. Savings accounts typically offer lower interest rates, around 0.01% to 0.5%, but they provide a secure place for your money. According to a recent survey, around 40% of Americans don't have enough savings to cover a $400 emergency. This highlights the importance of building a solid savings foundation. You want to avoid being caught off guard when unexpected expenses arise. Now, let's switch gears and talk about investing. Investing is about putting your money to work for you over the long term. Instead of just letting it sit in a savings account, you seek growth by buying assets that have the potential to increase in value. Consider the stock market. When you buy shares in a company, you're essentially buying a piece of that company. If the company does well, the value of your shares can increase and you can sell them for a profit. Historically, the stock market has yielded an average return of around 7% to 10% annually after adjusting for inflation. This means investing can significantly outpace inflation and help grow your wealth over time. One of the biggest differences between saving and investing is the level of risk involved and the time horizon for your goals. Savings are low risk, you're unlikely to lose your money, but the growth potential is also limited. Investing, on the other hand, carries higher risks. The value of your investments can fluctuate with market conditions, but over the long term, the potential for growth is much greater. If you're saving for a short-term goal, say a holiday next year, you'll want to keep that money somewhere safe, like a savings account. But if you're investing for retirement, often 20 or 30 years away, you can afford to take more risks, because you have time to recover from any market downturns. Another key difference is liquidity, how easily you can access your money. Savings accounts are highly liquid. You can withdraw your money anytime without penalties. Investments, however, may not be as liquid. For example, if you invest in stocks, you can sell them, but you might not get the price you want if the market is down. Imagine needing to sell your shares during a market downturn. You could end up selling at a loss, whereas your savings account will always give you back what you put in. That's why it's essential to have a balance between savings for short-term needs and investments for long-term growth. So, how do you decide whether to save or invest? Ultimately, it depends on your financial goals and your timeline. For short-term goals, if you're saving for something in the next few years, like a house deposit or a wedding, prioritize saving. For long-term goals, if you're thinking about retirement or building wealth over the next few decades, investing is the way to go. So, to recap, saving and investing are two sides of the same financial coin. Saving is about security and liquidity, perfect for short-term needs and emergencies. Investing is about growth and taking calculated risks with your money for long-term gains. Remember, both are essential parts of a sound financial strategy. By saving for immediate needs and investing for the future, you'll be well on your way to achieving your financial goals. If you found this video helpful, please give it a thumbs up and share it with your friends. And don't forget to subscribe for more educational content on personal finance. What are your thoughts on saving versus investing? Let us know in the comments below. Until next time, take care and keep striving for financial well-being.